what happens is people lose their minds in a bull market.
The new highs confirm that we're in a bull market.
The top of the first crypto bull market.
Risks. So maybe this is a bit more difficult in the short-term timing.
In the bear market, they get rid of all their tokens. They say never again. It's the worst thing I've ever done. And in a bull market, they end up buying too much. And really, to knock up the movement from 2.5 trillion to 10 trillion to 100 trillion. So if you just extrapolate that chart, you get to 1 billion users by the end of 2025 and 4 billion by the end of 2030. Okay, that's half the world. Okay, so what does that mean? Well, you can also take the log chart of Bitcoin and just extrapolate out into the future, and you can see the trend rate of growth, the exponential trend over time. So it gets to somewhere like $1 million, and what happens is the space goes from 2.5 trillion, where it is today, to, let's say at the end of this cycle, 10 trillion, maybe 12, maybe 15.
As we enter a world of financial intrigue and shifting market dynamics, Real Vision CEO Raoul Pal shares his latest insights on Bitcoin, crypto, and the market's direction in the weeks ahead. With the expertise of a seasoned investor, Pal highlights Bitcoin and the broader cryptocurrency landscape, emphasizing its growing importance amid economic uncertainty. Bitcoin currently holds above $6,200, up over 47% year-to-date. Amid this delicate economic balance, Pal delves into key indicators and predicts a potentially explosive rise in crypto prices. Before we continue with the rest of the video, do check out daily 5-minute crypto newsletter with all the latest crypto and Bitcoin news. It's a fantastic analysis of on-chain crypto data and breakdowns, and the best part is it's absolutely free. They'll cover expert predictions, breakdowns of on-chain crypto data, and any breaking news you need to know, all in a nutshell. Click the first link in the description and enter your email to join over 50,000 others in becoming a better crypto investor right now.
Most people, I can see it already scared of the down cycle to come because they've all got PTSD of the last one. But if you want to go to the OGs of this space, the Dan Moorheads, the Wences Caceres, all of these guys, they didn't give a fuck. They just rode it and added into the down cycles, and they've compounded massive wealth. Massive wealth. And there's many people who are not public who've done the same. It's the single most important thing. Decide what your time horizon is. But most people fear the downside more than thinking about its opportunity. Even though it never feels great, I was excited about it in 2022 because it meant I could add to my positions at great levels and compound. So then you get back to an all-time high much sooner than everybody else who's just done nothing. So that's really interesting. And so time horizon is super important. If you just don't want to deal with the downside because your psychology doesn't allow you to do it, that's fine. You need to really think that thing through. Now, what happens is people lose their minds in a bull market and in a bear market. In a bear market, they get rid of all their tokens. They say, never again. This is the worst thing I've ever done. And in a bull market, they end up buying too much stupid. And really, to not up the movement from 2.5 trillion to 10 trillion to 100 trillion. So allow yourself a bit of space to do that. You know, I've got positions in dog whiff, hat and bonk and, you name it. But when I look back in my portfolio, it's probably 1%. But I look at it on the screen all day. I'm checking the whiff price all day. It's ridiculous. It's 1% because the rest is just a buy and hold long-term position. And then I see a lot of people trying to be overly cute by saying, oh, I'm going to own this underappreciated crypto like Cardano or XRP or whatever. Fine. But you're taking a risk that they're not going to appreciate the same as the proven assets. Now, the proven assets keep trending. If I look at the compound rate of growth, the annualized rate of growth, Bitcoin's 150%, ETH since 2012, ETH is 180, about 160, 70%, something like that, since 2015, 16, and that's per year. I mean, this is bananas returns. And then Solana's like 200. And that was a snapshot in February before. I mean, many of these aren't at all-time highs yet. So the returns from just owning the top assets is so good. Now, I also understand that a lot of people may only have 10 grand worth of savings. So they think, well, even if Bitcoin goes to 1 million, that's a 14x. So I've got 140 grand. Can that even get me a deposit on a house? Is that a retirement saving? I get it. So people really want to take more risk, but just do it intelligently. And that's how not to f this up. Because if you turn your 10 grand into zero and you do it every crypto cycle, which many people did, you know, the NFT cycle destroyed a lot of people, and a lot of people got destroyed in just all of the kind of super early stage speculative stuff. We've all got wallets of shame, so it's not like any of us are any better. We all have the wallet of shame. And don't use leverage is the other one. That's the other thing that people tend to do is they love getting a yield. I don't see the point. So yields have risks. They come with a risk. Even staking yields, it often means if you're not liquid staking, you've locked it up. If it's liquid staking, there's the risk of the platform, of Lido or whoever else going under, or something happening, right? Something unexpected. And in crypto, something unexpected always happens. Having leverage on a 70% volatility asset class is a very, very dangerous thing.
Raoul Pal states that crypto is experiencing the fastest adoption of any investable asset in human history. By the end of 2025, he predicts there will be 1.1 billion active crypto wallets. The growth rate is astonishing, and Pal believes this will lead to the fastest accumulation of wealth ever seen. After decades of research, every chart and analysis points to the same conclusion: liquidity drives everything, and crypto will outperform all other assets. Pal has been emphasizing to investors for months that all the key factors are aligning, and we are now entering what he calls the banana zone, a period marked by explosive, parabolic increases in crypto prices.
Likely you will lose control of your coins. Your one job is not to lose control of your coins. That's why storage is super important. Your one job is not let go of your coins. Keep it for that 5 or 10 year bet, and your future self will thank you forever for doing it. I bought Bitcoin at 200 in 2013. It went up to 1,000. Then it collapsed 87%. But I had a long-term time horizon. I'm like, fine, it's an option, whatever. I didn't put a huge position on, but it was decent enough. And I just didn't look at it for a while. I followed it, but I didn't worry about the P&L because it's like the bet goes on over time. It's an option. And eventually I sold out mistakenly in 2017 when things were starting to get crazy. I was up 10, 12x, and it was 2,500. They had the Bitcoin forking wars. I didn't really understand what was going on. And I wanted to be clever, overly clever. So I took profits. I thought, yeah, I am clearly George Soros. I've just made a 10x and, wonderful. It went up another 10x in the next 6 months. I mean, people don't remember 2017. They're still scarred by the last cycle. But 2017 was wild what happened at the end of that cycle. So, it went from 2,000 to 20,000, then fell 85% again. And I didn't get back in until that sell-off after, that was my signal, and I got back in. Traded well, bought the down 50% period, everything else, in it, locked and loaded, massively got a much bigger position than I did the first time around, and have been in ever since. I went back, and I should never have done this. I went back and said, I wonder if I just kept my original position and did nothing. I'd have done 5 times better. And then I thought, okay, what happens if I did what I was supposed to do, which was, let's say, double that original bet that wasn't so big that you couldn't do that. Just double that, just add that same amount in within 40% of the low. So you're giving yourself tons. I'm not saying, you're going to catch the low, but you got 40% wiggle room to somewhere get around the low. So that's dollar cost averaging around in a bear market. I'd have done 25 times better because that's compounding. And that was a stark lesson to me. You've seen me post in the past charts of the adoption of crypto. So we use active wallets. Now, we know they're double counted, but we're comparing it to the internet, which was IP addresses, which are also double counted. So it's fine, right? It gives you the rough rule of thumb. There's about 520 or 550 million wallets, active wallets out there. My working thesis now, technology side's just been beaten by AI. So this is the fastest adoption of any asset class or technology the world has ever seen, just because Microsoft and other things can install it everywhere instantly. But it's massive because it is an asset, and AI is not an asset. So if you just extrapolate that chart, you get to 1 billion users by the end of 2025 and 4 billion by the end of 2030. Okay, that's half the world. Okay, so what does that mean? Well, you can also take the log chart of Bitcoin and just extrapolate out into the future, and you can see the trend rate of growth, the exponential trend over time. So it gets to somewhere like $1 million, and what happens is the space goes from 2.5 trillion, where it is today, to, let's say at the end of this cycle, 10 trillion, maybe 12, maybe 15, depending what the cycle's like, and then on to 100 trillion, which is the size of most of the other asset classes like equities. So that movement from 2.5 trillion to 10 trillion to 100 trillion is the trade. And that also happens to be the fastest, largest accumulation of wealth the world has ever seen. It's of that magnitude of wealth generation in one short period. It's an equivalence to the entire baby boom generation entering into financialization, buying stocks and stuff like that, plus the opening of China to the WTO, plus the Iron Curtain coming down in Russia. Nobody's ever seen anything like this before.
Pal's analysis highlights the liquidity cycle as a key indicator for understanding market shifts and currency debasement. He points to a pivotal moment in June when his weekly liquidity index hit its lowest point, prompting him to increase his focus on Ethereum. Pal also notes the divergence between liquidity and asset prices, explaining that during bull markets driven by adoption and speculation, cryptocurrencies often outperform liquidity metrics. Based on his research, Raoul Pal strongly advocates for strategic investments in cryptocurrencies, particularly Bitcoin and Ether, which he sees as outperforming traditional financial institutions' balance sheets. He believes these assets provide protection against currency debasement and expose the flaws in the current financial system. What are your thoughts on Raoul Pal's argument that investing in Bitcoin and Ethereum serves as a smart hedge against currency debasement? Share your opinion in the comments below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.